And I'm just going to start us here on the 65 minute.
I'm not even quite sure what happened this afternoon.
Yeah. Yeah. I don't see us on YouTube yet. So let's see. Let's see here. YouTube public
How long is
available.
that delay to YouTube? It's long, huh?
I thought it was just about 10 seconds, but just based on what I saw
Oh,
right now, it seemed to be a little longer, like
maybe it feels longer. Yeah, I can't. I gotta stay
right
away
around
from
20.
trying to have conversations with people because it's kind of annoying. You know what I mean? You don't want to get into
Yeah,
too much back and forth.
yeah, it's a little rough. So I think we'll just get into it here. So Dave and I are here with Wall Street Jesus just to take 10, 15 minutes to go over some really cool stuff that has been playing out based on the levels and the scenarios that we have been giving in the new newsletter, the Wall Street Jesus Daily Brief. So what I wanted to start with would just do a quick recap of what we talked about last time for the guys that were here during the live session or saw the recording. We were talking about the balance areas, how important balance areas are, and how those could be traded, right? And just as a quick reminder, the balance area we were talking about was going from about 55, 80, 90, all the way up here to 56, 70, right? And we were talking to you guys last time on Thursday after the close, and we were just, talking about how we had been ping ponging through these areas and showing you guys how this is a pretty high probability trade that you can trade these from the upsides to the downside until it breaks, right? Then what ended up happening on Friday is we actually moved to the balance low once again, all the way up to balance high, and then all the way down again, right? Then we're coming in here after the long weekend, and now I'm thinking like, when is this balance area going to break, and is it going to break to the upside or the downside? So we're coming in here on Tuesday, and we're actually breaking below the balance. We're not able to come back inside, and we start rolling over and trending down. This is when we have to start thinking, okay, this balance area is now breaking. Now we're probably going to set up a pretty decent move to the downside. Where can we go? That's when we have to start looking at our levels, right? So I'm going to flip over to a 1 minute time frame here. And now we're going to start talking about GEX levels and why they are so important. And the reason why we like these GEX levels so much is because they function in two ways. Like a good level should function in two ways. You should get a decent, good reaction when the level hits, and it should be a magnet. Price should be pulled towards it, right? So here's this area, the 55, 80 to 90 area, which we broke below, couldn't get back above, and then we start trending down. I was actually on a call with Dave when this was happening, and I was telling Dave, "Hey, Dave, don't you think now that we broke below balance, we're going to go and test that major put wall?" And Dave, what was your answer?
I don't remember, but I'm sure it was like I would say right now. Yeah, yeah, that's the most
Yeah,
likely location.
yeah. So check what happened here, and we pretty much start trending down, trending down. And I also want to point out that the first time you hit a level is super significant, right? Because these are high liquidity areas, which means that there are probably going to be a lot of resting orders the first time it hits. So let's check it out. What happened here, right? So the level was 15, and we come down here and we tag it almost to the penny, right? So we get a bounce from 16 all the way pretty much in a straight line to 46. That's a 30-point bounce. You can make a heck of a lot more than $29 a month, which is what the newsletter costs on a 30-point move in ES or even the MES, right? And then now let's just keep going. And let me see if I could move this a little higher so the levels are not behind our faces, because that would be pretty shitty. I think we should be good now. So here we get that initial bounce, that first reaction. That is something I try to play every time, right? I want to have a limit order here right above so that I can fill on the first touch. Now let's go take a look again. Here's a second touch. That's 15 to about 25. That's a 10-point bounce, right? Then you can see all of these bounces here. Like you're getting good reactions every time. And I would say the more times a level get tested, the less reliable it becomes. So here you can see we start chopping a little bit around it. And this is in the overnight session as well. So probably a lot of us weren't paying attention here. Here's another bounce. Oh, excuse me. Here's another. This is 15 to 25 again. Another 10-point bounce. Here again, 16 to 28. So that's more than a 10-point bounce. And if you're holding these trades, like you're getting a lot more, right? It never came back and actually retested this level, and we came all the way up to 55, 65 here. So this is showing you like the power this level has, the ability to pull price towards it and then create strong reactions. So these are false breakdowns. So you can play this as a false breakdown. Once price comes back above, you can take it as a trade. And there's no guarantee that these levels are going to work every time, but they're good areas to manage risk, right? Like you should still use your stops and you should still manage risk, but these are very, very high probability areas that we're going to go to and that we're going to get reactions at. So I know I'm saying a lot here. Is there anything so far that you think we should mention, Dave?
No, I think you're doing a good job. I mean, like you said, I think one of the key reasons this works so well is that it's a high liquidity area. We know people have traded a lot there. We know they're going to be interested in trading there again, and it's playing those reactions whenever we get there.
Yeah, and we're still this level actually moved from Wednesday to Thursday from 15 down to 12. So that's why I have two lines here, but we're still on Wednesday, right? So Wednesday we are above the level for most of the session, and at the end of the session we come in and we test it. And what happens, right? Pretty much tested to the penny, 15 to 41. That's a great bounce, right? Then the level actually moved down 3 points, which is not that significant. It's just a small move in the gamma level. So I'm going to take this off, and now that we're looking at Thursday, we can just look at where the put wall was, right? Here, this was in the evening yesterday. We come into the level, we get a bounce from 1450 all the way to 37. So, I mean, at this point, this level has worked so many times that you should be happy with what you've collected so far. And if you want to keep playing it until it stops working, that's totally up to you. Because at some point, it's probably going to break, right? And there's a couple of things we can talk about what happens when the level do actually break, right? So let's keep going here. Oh, here's another bounce. We got very, very close. And these are areas, right? You can't expect it to be to the penny every time, but we're coming in here. We're starting to put in a pretty common reversal pattern, and we get a really, really significant bounce off that level. Here we're coming in this morning to the penny, bounce from 13 or 12.50 all the way up to 60. And now we're coming into to today's session, right? We're coming in here. I don't know how many times we've hit this level and that you could have traded it so far, but here we go again. We tag it, and this time we get a pretty small bounce. Now I'm thinking, okay, smaller bounce. Maybe this level is starting to get a little bit worn out. We're actually starting to roll over, and here it breaks, right? What usually happens when the put wall breaks, because we know that dealers and market makers have to hedge underneath that level, is we're probably going to retest it, right? It's not just going to break and we're just going to waterfall lower. And that's exactly what happened here, right? We come back and we retest it. We roll over. We retest it again. Now we're able to get back above. And now we're coming into the last few hours of today. And let's see how it played out. Broke, retested, above. And now there's a fight right here. Dave, you don't think it's a coincidence that we closed right here today, right?
No, I don't. I think we're just kind of getting pinned to that level, especially in front of NFP tomorrow. That's a pretty
Yeah,
big deal, right? And so one of the things you mentioned too that just kind of wanted to highlight, right, is whenever, when we get to this level and we have that big bounce the first time, and I think ultimately it bounced 50 points or something like that. And each time it
yeah,
comes into it, it's bouncing lower and lower and lower. And I think what we're really looking at is that there just aren't any buyers in this market, and the fact that it's bouncing there uh, just goes to show kind of how important that level really is. If that level, if we didn't have as many eyes looking at that and as much liquidity there, I think we'd be, 50, 100 points lower by this point, right? So
yeah,
um,
yeah,
that's why you're saying at some point these levels fail. If there were buyers in the market, we'd be 100 points higher right now. We wouldn't keep retesting over and over smaller and smaller bounces and just kind of getting pinned there at this point. So um, now it's become
yeah.
an important level for more reasons, right? We have a lot of we have a lot of people that have been traded this level now, along with all the GEX that's there. We're pretty far ways away from monthly expiration. Um, so tomorrow's going to be really interesting, I think.
Yeah. And I haven't taken a look at the GEX levels that just came out for today. But when these levels get hit, what we want to see is, does it move or does it stick where it is? If it sticks where it is or in the area it is, then we can still, make the assumption that this is a significant support area. If this major put wall rolls a lot lower, like let's say here down to the minor, that's a pretty significant bearish sentiment shift, right? Now major support moved from here down to here, and this is going to be the new major magnet, right? So if there's two really important things I want everyone to get from here is like how you can use this as a target. Like we broke out of the balance, we broke below the zero gex line. Where did we go? We went to this area. And what happens the first time we hit that area? Well, we get a significant bounce. So if you learn how to use these levels that we are providing to you daily in the daily brief, I think you can, you know, you're going to find some really really high probability trades. And these aren't the only levels we provide on a daily basis. You can pretty much hire Mr. Dave here, who is a market profile expert, for $29 a month to do levels for you every goddamn day.
Good
So
job,
I
Marcus.
have Dave's
I'll take it, man.
yeah, I have all of Dave's level on his chart. On my chart, it took me, about 10 seconds to paste this in this morning. And you can see we're getting nice reactions in these areas. So if you are too lazy to do the levels yourself, as I am, and I'm not as good as Dave either, then you can sign up for the daily brief, $29 a month. Go to wallstreetjesus.com. I'll post a link in the chat here in a few seconds as well. And Dave, if you don't have anything else to say, we'll give the controls to
One
Mr.
more
Jesus
thing.
himself.
One more thing.
Yep.
Sorry, Jay, but Vincent asked in
No,
the
take
chat
your
about the
time,
GEX
brother.
ray. All right. Vincent asked about the GEX ray. So the levels did line up today, but that doesn't happen every day. And that's one of the reasons why we really want to highlight these levels. These high time frame levels don't come into play every day because we're looking
No.
at all the expirations, weeklies, monthlies, quarterlies out 10 years, right? And you may not come into these levels for 10 days, 3 months, 6 months, whatever. And when you do, that's why they're even more significant. There's even more liquidity there. You have people playing all time frames on these levels. But whenever you have the GEX
Mm-hmm.
ray and the high time frame levels together, then that's even more significant because you're looking at zero DT also, right? And that's what we got today as well. So they're two different levels,
Yep.
traded two different ways, but they obviously coexist pretty well. So
Indeed. And the Gex Ray, for the people who don't know, that is a tool that we have inside of the Steamroom, which shows you where the gamma levels from zero DTE options are, and those are very important intraday levels because, like Dave said, these longer time frame Gex levels, the Gex levels that we're deriving from all expirations, they're not hit every day. But the levels on our Gex ray, which let me see if I can actually pull it over here for you guys. We'll see if it's going to show. Those come in pretty much every day and often several times a day. So if you're a day trader or a scalper, I would highly recommend to try a trial for the Steamroom and check out the Gex ray because it's a great tool to give you targets and entries for intraday trading. And again, just so you guys can understand why these Gex levels work so well is because these are levels that are very, very important for market makers and dealers. And they have to do something called dynamic delta hedging. So there's not like an imaginary line on a chart like I'm going to buy here or sell here. These are algos that have to buy or sell when we hit these levels. So they're pretty reliable. So, send us a message on the intercom chat if you guys have any questions. Like I said, I'm going to drop the link in the YouTube chat right now. And just try it out for 7 days.
Thanks a lot. Thank you, Jay.
Awesome. Perfect.
Thanks, Jay.
Thank you, guys. Enjoy the rest of the night.
See you guys.
I got to share my screen now, right? Hold on. There we go. Nope. Norris, maybe you got to give it to me? Or am I? There we go. And let me fix this over here. All right. How's everybody doing? So you have some earnings out. Looks like Avgo a bit soft. What's wrong with this here? A bit soft off the number, down about $8. The other ones were IoT. What's with this leg? Up a little bit, up over $2, 6% off the number. Doku, I think that was down. Down about $1. And I thought there was another name. Oh, you had Costco come out with what was it? Same store sales or something? Up a little bit. So that's it. Avgo was the big one. The semis have had some issues of late, right? Underperforming and consolidation for the most part. We'll talk about that. All right. Where do I start? I had a couple things that I wanted to run by you guys that I find interesting. First and foremost, on the market itself, I think kind of where we left off last week, for those of you not in the Steamroom, we're pretty much seeing the same stuff. And meaning that there's a lack, again, what we're talking about when I'm referring to sweeper activity, right? So we look towards the sweeper activity, which is aggressive buying and selling in the options market, as a gauge on risk appetite out there, right? On conviction. And in individual names especially, there's been a significant lack of risk appetite from the flow, right? In single names. Now, we see it on time to time in the ETFs, especially the more speculative stuff. We usually would see it in more of the active mega cap names. Even there, the flow, if you remember, we're talking about how a lot of these names are cooked flow-wise. You're seeing more of two-sided action, meaning that when those names, like when NVIDIA is pushing higher in the morning, you'll see weekly call buying, right? When NVIDIA fades after the first hour of the day, you'll see weekly put buying. And, again, if you want my opinion, you're asking me, I don't see any edge or very little edge out of any of that information in regards to the flow, right? We don't want, we're not looking to the flow of buyers chasing the price, right? Chasing the price action. We're looking for buyers that step in to potentially turn momentum and turn the price, right? So a lot of the action we're seeing in these names are really borderline useless to me. And outside of that, I think even it started up a little before earnings season, if I remember correctly. The buying has just dried up significantly, okay? And we continue to see the same thing. As far as new names are concerned, you guys know I'm a big proponent of new names, because when they're buying new names, new setups, that is a sign, the healthiest sign of risk in a bull market, right? If the pros are aggressively putting on new risk in new names tells you a lot about their conviction, right? When they're not doing that, a lot of times I look at it as a sign of caution, not necessarily a sign to short, right, or to be bearish, but a sign that the quote unquote smart money out there is cautious, right? And I think that's when you try to dumb it down into simple terms of what's been going on here. I think it's as simple as that. There's just no interest, zero interest right now in putting on any new risk of size in anything out there. Okay. And now you have the semis, which have been the hot part of the market, right? That's where all the excitement was. That's where all the aggressive buying was. That got obviously overcooked, and they are in consolidation now. And because of how crowded they become, meaning how much they were bought and how aggressive the move higher was, these names are consolidating, and you're really not seeing much out of the flow there. Okay, so that takes a big part of the market where we were seeing that aggressive buying out of the market now, and we continue to see a lack of interest in anything else. Okay, now, granted, there are selective names out there, and that's, I guess, the best adjective to use. There's some selective buying out there, isolated buying, right? And we see in certain names, and that's all fine and dandy. And if the market is range bound, you could probably be successful and make money off some of the noteworthy selective buying out there. But where you have the highest probability of success, especially on the long side, is when you have the wind at your back. All right, now I'll give you an example. If they're selectively buying a tech name, right, or a Mag 7 name, and it's just that one name, but we're seeing put action and hedging and two-sided action in a lot of the other names that trade alongside that name, okay? Obviously, you don't have the same odds or probability of success as if they were aggressively buying numerous names in that particular group. Okay, so that's the difference in what we're seeing. Again, if we're in a range-bound market, we continue to be a range-bound market. What you'll see is a name like that, a tendency to outperform or hold up better when the rest of them are weak. And when they rally, it will outperform and you can find alpha. But if the rest of the market turns because of a lack of buying, just because they were buying that one name, that isolated buying is not going to do you any good, right? So that's the gist of what we're seeing. And what's most interesting about that is how we look at positioning and sentiment as a whole, right? Because you guys here on every webinar, and especially if you're in the Steamroom, we look for those extremes, right, in positioning where, the crowd gets on one side of the trade via long or short, and that unwind can be so violent and long-lasting and aggressive, there's nothing better than it, right? Where now we're kind of stuck in the middle, I guess is the best way to put it, where it's kind of screwing us on both ends. And here's what I mean by that, okay? Because of the lack of buying from institutions and hedge funds, okay, we're not seeing the type of sweeper activity and sweeper buying we would want to see, right? Who do you think is behind that flow, the type of flow we want to see? That's institutional buying, right? So at the same time, when funds are not out there buying, okay, a lot of people look at that through a contrarian point of view and think of it as a good thing. And when it's at an extreme, okay, if they're not buying and they're shorting, that's bullish, okay? But if it's kind of in the middle where they're just not buying, but not really getting aggressively short or not staying aggressively short, that's kind of the worst of both worlds, if that makes any sense, right? because then we're not getting any new ideas out of the flow. Okay. And the extremes on the positioning end for turning points in the market are going to be quick to unwind. And that's the epitome of what's been going on here, right? It shouldn't last forever. Okay. Again, you've heard me talk about this throughout a lot of this bull market. Okay. This bull market has lacked institutional backing in new names, under the hood type names. Okay. Institutions, hedge funds, what they've been crowding into have been the mega cap quality names, right? And you've seen their stocks benefit tremendously over the last year plus because of that. Okay. Now, excuse me, these names have been so overbought and overowned that you get to a point where there's not a buying left to be done, right? Either these names got to pull back a worthwhile amount to get some money on the sidelines to crowd more into these names, or, they get shaken out in the downdraft, or they got to buy new stuff, right? If I own, let's say, think of yourself, your account. If you own NVIDIA and Amazon, and that's all you've been buying throughout a particular bull market, eventually you're going to get to a point, no matter how much you may like Amazon and NVIDIA, you're up on the stock, you're making money on the stock. You're not just going to keep buying the stock because you're bullish Amazon and NVIDIA, right? You're going to look elsewhere. You're going to look to see if anything is appealing elsewhere, anything else, right? If not, in all likelihood, the only time you'll add to those positions is if those names come in a decent amount, right? I mean, if they come in 5-10%, it may not be worth your while to ruin your cost if you're up nice on the stock to continue to add on into an NVIDIA and an Amazon, right? Unlike what you see on FinTwit, where any little dip in these stocks, people are trying to buy the dip, or they're telling their followers to add on the dip, right? First of all, if they're not lying and they're bullish on these names, they probably own them a lot cheaper. And, it's foolish to just continue to buy these things and ruin your cost if you have such a nice cost by buying them higher if they haven't corrected much. So that's what's going on. That's what we've been in a kind of lull here where the institutional money can't get bullish anywhere else. And there's legitimate reasons out there why, economically, right? You're kind of, if you ask me right now, in a damned if you do, damned if you don't type backdrop. Meaning you want rate cuts, right? So maybe that can open up other avenues for ideas out there, small caps and other things that have been out of favor because of the tightening cycle we've been through. But at the same time, you want rate cuts, but you don't want the economy to really slow dramatically, hence a recession, because you don't want to own those things into a recession either, right? So and you can see the market tussling with this, right? As we get economic data, right, you get some soft data, which usually the market would get excited off of it because that'll bring rate cuts. But now the concern is, well, we don't want the economy to slow too much because the Fed didn't even start cutting yet. And there's a lag effect that comes with cutting. So there's legitimate reasons why some of the institutional money has been cautious out there, right? And that's what we continue to see, right? Whether we like it or not, obviously we don't. It's been an ongoing thing here. And now it's really, I think, at a point where we're seeing the worst of it, in a sense. We're seeing the worst of it. I'll give you, and tomorrow, like, for example, you got the NFP coming out tomorrow, right? And like ideally, a Goldilocks number there is ideal, right? If you get a strong job number tomorrow, the initial reaction is probably bullish, but after that initial reaction, the market is going to start hustling again with, okay, it's bullish, but is it too bullish? Now that half 50 basis point cuts off the table. Now it's just a quarter. Do we buy the mega cap quality names again, which is probably going to be the case? Or, do we buy the small caps because the economy is not slowing enough? And you're not going to see, it's going to be really difficult to see a continuation of a broader rally. You really got to thread the needle. It's not impossible, but you got to thread the needle. Okay? And that macro stuff, again, no matter how smart you are, it's impossible to predict. Okay? The smartest minds on the street can't predict it. And that's why we look towards the flow for clues of how, quote unquote, the smart money may be positioning ahead of this stuff. And right now, the takeaway from that, quote unquote, smart money gauge is they're unsure and just as clueless as we are. That's the takeaway. Okay? So what do you do in that type of market? Like we've been saying, you try to trade. Right? That's why, and again, depending on what type of trader you are, if it's your cup of tea, if not, you stay patient. But that's why, like Norris and Dave earlier talking about levels, and in this type of environment, these things are even more important if you're going to try to trade through this environment. Right? Because it's really the only thing pushing things around right now. But this has become right now a trader's market. You really got to pick your spots. And it's not easy, especially if you're trying to swing trade through it. Forget about in names, it's even more difficult because you got to get that part right as well. Okay, so that's the backdrop, just the general backdrop of what we're dealing with right now. And again, as far as any clues of us getting out of that right now, I'm just not seeing it for the stuff I'm looking at. Okay. Now, again, that doesn't have to be a net bearish thing, right? I think right now, to add to the difficulty, you have a mixture of things you could put in the bullish and bearish column, right? And it's tough to decide which will matter more. I think ultimately the price action and momentum will make these things matter, and it's something to act upon rather than try to predict. Okay? And here's an example. I'll leave this as we get into positioning, but just an example of what I'm talking about here, right? So this is from Goldman Prime, okay? In what institutions are doing through their desk. The red is hedge fund, and that's net, right? So net long, net short. And you can see they are net short through Goldman, right? For a good portion of this last up move. And this down here, I think, is the more shocking thing. This blue line are the long only funds who do not short. All right? And you see that net line is in an obvious downtrend. Okay, and you see some pops here and there, but ultimately it rolls over, right? And that's kind of what we see. We see these pockets of buying out there within the flow where it broadens out and they're looking towards new things, new names, and it just doesn't last, right? And that's exactly what this line looks like. So this line is not telling us that long only funds don't own any longs, okay? What it's telling us is exactly what we know right now anyway, is that the stuff they're long is your Microsoft, your Nvidia, all your mega cap quality names that have been up and to the right over the past 9 months. Okay? That's all they've been buying. But that's not enough to move the needle overall, right? Hedge funds, that's all they've been doing on the long side. Okay, are those quality mega cap names? And when they're chasing market price action, they'll get long the macro stuff, SPY, QQQ, ETFs, that sort of thing. As far as individual names, everything else, hedge funds are short. Okay? And long only funds want nothing to do with. Here's another thing that came out of Bova this week. You want to know who's the only buyer in the market right now? Are buybacks. That's it. Here is corporate buybacks. Okay? For the week, they're the only outfit that did some buying. Retail, doing nothing. Hedge funds, not doing any buying. Institutions, Zippo. And you kind of see it in the price action too out there these days. Here's the weekly flows by client and sector. Total, net sellers. Huh? Did a little buying here, real estate, sold tech. And by the way, tech too. Like everyone talks like a tech bubble or, crowded tech. It's not tech. It's just mega cap tech. Right? When they were buying tech, they weren't buying the broad tech sector. They were just buying the Microsofts of the world, the Amazons, the Googles of the world, the Apples of the world. Not the underbelly growth software names or stuff like that. Right? They were literally buying the quality, the cream of the crop in any of those groups. And you can see the rest. Look at all this in the middle here. Talk about no interest. Look at this. Sector and size flows by client type last week. Hedge funds. Here's what hedge funds did. Just hedge funds. So you can see, right? The blue is where's the thing here? Oh, don't tell me I chopped it off. One of these is for the month. One of them is for the week. Anyway, here, it's right here. What an idiot I am. So for the week, you can see they net, they were short, right? As far as individual sectors, they got aggressively short. And overall, they're net short, but not as drastic. 4-week average, I should say. That's the 4-week, not overall net. So for the month. Right? Here's tech down here. Sellers. And again, they bought nothing, literally nothing last week. Over the past month, ETFs, that's the only place they did any buying. All right, here, size, small caps, no interest. They trimmed some large cap. That's where most of their long exposure has been. Here's institutions. Last week, puked them up. Over the past 4 weeks, net sellers. Look at this down here. This is unbelievable, though. Literally, they didn't add anywhere. Okay? And again, the reason why you're seeing large cap seeing the bulk of the selling is because that's the only place they were long, are those mega cap names. And, right, you saw the 13Fs, or the hedge fund, they report their positions that came out not too long ago. Right? What do all the big guys do? They trim some of their NVIDIAs and stuff like that. Because that's where the majority of the buying was. All right, so I just wanted to start there because I think it's important to understand, because we talk about all this stuff, right? And especially when it comes to positioning and sentiment, we always talk about when, the crowd is shorting or not buying as, or even, or selling when it's at an extreme through a contrarian look, it's a signal, right? And that may be. But when you get to that in-between state where we spend a lot of time in, right? You don't spend a lot of time at those extremes. A lot of that time is that in-between. When we're at that in-between and they're not doing any buying, we're not going to see any sweeper activity. Not the type that we're looking for. And that's kind of what we're going through right now. All right. Here are the big picture signals we always look at on this webinar. Some of the credit signals, credit default swaps, nothing really to talk about here. Just signaling more of a choppy range type market. No significant risk off or risk on here. Okay. And that's been pretty much the main takeaway from this particular the read overall. Credit spreads, and these are corporate bond yield spreads. Okay, so these are not high yield bond spreads, which is something else as well. Okay, so these are just corporate bond yield spreads. They're definitely diverging or have been diverging for a while now from the price action in equities. Okay, and for me, the takeaway there is just, again, the health of the market, right? If you want a healthy risk-on move, okay, that fundamentals back or the Fed QE backs, what you're going to see is you're going to see it in the price action of equities, and you're going to see these credit spreads tighten up. Right? And when you see that, you're going to see a broad participation, a healthy participation, I guess is the better way to put it. Okay, when you're not seeing these credit signals confirm risk on, you get kind of what we've been seeing for a while now, a randomness to the market, dispersion, right? Within sectors. Couple names in this sector are higher today, couple names are lower. Next week, different names are higher, different names are lower. This name is in the downtrend, this name is still in an uptrend, right? Same sector, same pocket, same sector of the market. So the credit market signals that we pay attention to anyway have not confirmed any risk on behind any up move that we've seen in quite a while. And you can see here, right? These stop tightening out right over here as this market continued to extend. And that's been the case since. Now, the backdrop positioning was, when we talk about extremes, you got a couple different things going on here. Okay, as far as the risk is concerned, downside risk is what we talked about, right? When the market initially pulled back a couple of weeks ago, whenever it was, the good thing about it, you had a little rinse in some of these systematic and vol control fund extremes. Okay, they've been shorting the VIX aggressively, right? And playing the long side of that. CTAs are trend followers. They had been in a crowded long position for a while. The momentum of the market rolled over. They took that exposure down. Okay, but not enough of a cleansing for it to really make a difference as far as opportunity on the long side. Okay, you got a nice snapback squeeze, but as we spoke about, you guys remember a couple of weeks ago when we talked about it, right? Before even we went through what we went through over the last week here. For the market to just continue higher, you just didn't have the ammo from this crowd. So one or two things needed to happen. We needed to see some new leadership emerge, right? We needed to see out of the flow sweepers start picking up new names, small cap, somewhere, somehow, something had to carry the load. Okay, because it wasn't going to be any momentum, buy-side momentum coming from this crowd. Okay, because what happened was the snapback rally we just saw was so aggressive that the rinse that we saw in their exposure and positioning is right back to an extreme again. right? And then you get a little market weakness, and now all of a sudden, CTAs are back to sellers, right? As you see Goldman point out here. Flat tape, market does nothing, they sell. If the market's up big, they chase. If the market's down big, they unload. You had some of those short-term triggers that we saw initially the first go around. They breached, right? And that's nothing major, but it makes the market heavy over the short term, right? The problem is if some of those intermediate term triggers breach, then you got a shitload of supply that's going to hit the market. The vol control funds off the VIX, I mean, yeah, that VIX exploded for like an hour. It retraced the whole freaking move. In what, a couple days? All right? So all that covering of vol that they did that pretty much caused that VIX explosion, they put it all back on, as you can see here. And now you're back in extreme territory. So now, here's the problem with this stuff now, right? Now, if you do get a negative reaction off the NFP tomorrow, and if it's negative enough, you got some downside momentum that can come from this. You got some supply that can come to hit the market from this. That's the problem. In the futures market, again, we like to pay attention to Sharpies, right? Which commercial hedgers. Other things that are measured are like asset managers, stuff like that. And you know, that's not shocking because we've been in the market where it pays to own the big names and the indexes. But you know, you got like the small specs, asset managers, still significantly long. They didn't get shaken out at all off the most recent pullback. So that did no good in that camp. So again, another form of supply potential selling in the markets if momentum rolls over. If it doesn't, okay. It's not going to play a part. That we talked about. Here's the most bullish thing on the positioning front. Okay? This is probably the only really bullish thing on the positioning front. And this is what I started off with. Okay, this is hedge fund exposure in individual names. Basically, what we looked at all in one indicator for just individual names, and you can see what they've done here. All right, they were slightly short. They got to dead neutral. Right, never chased the long side, and now, as you can see, just this past week they stepped on the gas, short in individual names. So why is this bullish? It's bullish because even if you do get a round of selling like we had a couple weeks ago, okay, in that form, the indexes obviously could come in, right? Because they own futures, they own ETFs. Some of these crowded mega cap areas of the market can see a decent amount of selling. They can weigh on the indexes, okay? That's obviously not bullish. But at some point, what's likely to happen is under the hood, you're going to start to see money rotate into other places because nobody owns them. You understand? So if these other areas that are shorted come down initially into a market pullback, okay, if they're short, they're more inclined to and likely cover in those areas. You understand? If they're not short, okay, and any of these other areas of the market that are underowned come in with the market pullback initially, it may open up some opportunities for institutions out there, right? Oh, this stock is down already enough, right? Now it's down another 10%. They find value in these areas. So what you're likely going to see is as some of the crowded stuff sells, instead of everything selling continuously, they will start to rotate. And that's what we've been seeing, but in a very gradual manner, right? Of recent. Like you look at the financials, okay? We talk about it a lot this year because I think that's the epitome of what I'm talking about here. The financials were the most shorted sector on the board coming into this year. The semis was the most overexposed sector on the board coming into this year. Right? So I think that's the light at the end of the tunnel here to offset some of the bearish stuff on the positioning front. Right? And, talking with my buddies, it has, and again, I'm not saying it is because it's nowhere near it, okay? But it almost resembles a post-2000 NASDAQ scenario to it, right? And what I mean by that is you had a NASDAQ bubble pop in 2000, everything came in, and then there was a point where a lot of areas of the market stopped selling and found buyers, while crowded tech was in a significant downtrend and remained in a downtrend. So even though the indexes were heavy and you were still seeing selling in some of these overcrowded names, okay, there was opportunity, there was alpha to be had in other places in the market. So we don't need to see something as drastic, okay? Because I don't think I would put this even in that category. This is even more, I think, secluded, tighter, right? This is like you have just the mega cap names in this setup. So even if a bubble was to burst per se, you have a lot more other areas that are not anywhere near in a bubble. So again, that is a glass half full look at things, in my opinion, as far as the positioning setup may be concerned. Okay. But, we always think of extremes, right? Is the market going to rip to new highs and new bull market, or are we going to crash? And a lot of times is in between. And we could just very easily remain in an in between, very easily, right? And we could see a more gradual type of rotation, right? Kind of what we're seeing now, but hopefully it's more aggressive than what we're seeing now, where it's not like some of these mega caps are not going to rally ever. They're going to be weeks, couple weeks they rally, but net, the majority of them may stay in some form of digestion, consolidation, and little by little, you'll see some other areas of the market break out, right? Right now, it's been solely of recent defensive areas. I think that's the problem. And that is related to the economic outlook, right? It's been a defensive rotation. Here's an example. These are your staples. You don't get any more defensive than this, right? We talked about the defense names. So this has been a lot more of a defensive rotation than anything else. So obviously we don't want that. We want other areas of the market that are under-owned to get attention, not just playing a recession. That's kind of what we're seeing right now, the recession playbook. right? And you got, and the other big thing here that everybody's talking about, and here's the problem, okay? When you get into September, okay, and you guys have heard me instill fear into you for the month of September, okay? The problem with the month of September is everybody knows it's a bad month, but still, there are times where bad shit happens. Now, if everyone's bullish and ignoring September, that is a travesty. That's when you already put one foot in the bunker and get ready. Okay, if people are ignoring the threat of September. But the problem with September, for whatever reason, I'm not even talking market terms, just in general in life, crazy shit goes on. And it's hard to look at it even as a contrarian because I've seen Septembers where people were skittish and still some of the craziest shit went on. 9/11. Right? 9/11 was post 2000 bubble. Think about that. The NASDAQ bubble popped, right, in 2000. Then in 2001, in September, okay, people already were pretty bearish and skittish. I mean, for crying out loud, the tech bubble just blew. And then you throw 9/11 on top of that. Think about that, right? So again, I'm just giving you an example that even when people are talking about being fearful of September, I've still seen just shit prop up out of nowhere. It's just one of those months. And look, right? Now again, seasonality is seasonality, right? If it was that easy. But, September, bears eat. And, by October, it's known as a bear killer. So I guess the point I'm trying to make is that when everything I just discussed, when you're seeing that on top of being in the month of September, you just want to be that much more careful, right? It'd be one thing. Like I'll tell you the truth. If sweepers were out there right now throwing bombs left and right on small caps and new names, whether it's September or not, I'm telling you the truth. I'd be playing. I'd be buying. I'm not going to sit on the sidelines just because it's September if they're aggressively buying all these new names and setups. But we got the total opposite of that right now. Right? There's a buyer strike, and we're in the month of September. Yeah. So that's a good point, Stephen. You're better off probably losing your money betting the football games. Just take it nice and easy so you don't get bloodied up. So that's kind of where we're at, okay? And again, depending on what type of trader you are, there are opportunities out there, okay? And here I think is the most difficult part, right? One, if you're a swing trader, okay, you're always taking that added risk of holding overnight, right? And it seems like every other day there's something, right? Like tonight, okay, something could have looked great today that you bought yesterday. You're up on. Here's an example. Tesla, right? Tesla caught some interesting action yesterday at a nice spot. Okay, you bought it. Had a nice rip today. Now you hold it overnight into the NFP tomorrow. You understand? So I think that's the problem you're going to face with a lot of things. Now, you can either choose to just be extremely nimble and tactical, right? Limit your downside, kind of stay a little tight and take your profits when you have them to try to avoid getting too caught up in that. Or if you're playing through options or even equity, giving yourself more time. But I think the risk you take giving yourself more time is getting caught in something a little more radical than just a correction that we've seen up to this point. Like a lot of you who have traded over the last year and a half don't even know what a real correction looks like, feels like. We haven't had one yet. Okay, this pullback here, okay, was nothing. Was nothing. I told you guys, in the late 90s, okay, that was the tech bubble, the internet bubble. You had corrections every 3 months that chopped leaders in half. Okay, think of NVIDIA getting chopped in half. And then going back to new highs. So, that's the risk. And I think a lot of people are leaning on that risk right now for good reason. They've been able to get away with it. But I'll just hold on to it type of thing. But as you can see, right, depending on how much time you have, it's not always the answer. It's not always the answer. Right? For me, the answer, and it may not be the answer you guys want to hear, but for me, the answer has been to just be patient and for however long it takes to sit around and wait for things to line up in whatever style you may trade, right? Whatever it is you're looking for. Like if you're a stock picker, right, or an equity player as opposed to an options player, this is not the right time to get aggressive, in my opinion. It's just not the right time. What are you gonna do? You're gonna buy a fucking $800 stock right now that's up trading at 70 times earnings? What, you lost your marbles? At least in the options, you could put in what you're willing to lose. It's not the right time. But I promise that time will come. Just right now, it's not the right time. So that's the moral of the story, right? There are trades out there. It's not going to be easy. Don't let anybody fool you. Oh, I'm scalping all day long, making millions, and I'm flipping here. I got out right in time before the NFP, and I bought after the NFP. It's all bullshit. You got to be okay with losing more right now. Okay, your rate of success is going to come down in this type of environment. And you got to be more nimble and just manage your bankroll properly. And you'll find things to trade. If that's not suitable for you, you try to sit tight and be patient. You try to sit tight and be patient. So yeah, that's the story. I see some of you guys asking about names flow wise. Path. Oh yes, what's up, Sahil? Path, we saw some pre-earnings call buying. That looks like, well, for now is the right move. We'll see how that shakes out. A Kathy name, but we saw some earnings positioning there. A few of the other names you guys are mentioning, again, there hasn't been much of any action. A-Lab, we haven't seen any more action there. It's been quiet. COHR, somebody mentioned, we saw some put selling there. Not call buying, but some put selling. Some of the names we're seeing some out of the money put selling in, which also makes sense, right? If you like a name, but you're unsure about the current environment in regards to the upside over the short term, if you like it, you sell them. I think they sold them $10 out of the money, right? So you sell some puts out of the money, you get put the stock. You like the stock anyhow. You wanted to buy the stock, right? So that's, some of the professional money is taking that approach out there instead of aggressively buying calls. But I'll rattle off a few names that, again, has caught my eye sweeper-wise. There's not a lot of them. So this RKT got a little ahead of itself, ran up into a niner. You guys have seen me mention this name. The sweepers have stayed committed in this name. Couple of just under the radar type names. This IFF. There was some decent Jan call buying in this name. International Flavors and Fragrances. I don't ask. This French fry name that has been obliterated, LW, we're seeing put selling and some call buying with time in. You know, a lot of these names, they're tough to get excited about. They're tough to get excited about. What else? Let me think. I mean, Tesla yesterday, we saw it was Feb calls. Again, for Tesla, it wasn't anything extravagant. But, you know, it was worth, obviously, you guys know in the Steamroom, it was worth me telling you about them. In a name like that, I'm not just going to tell you about any flow, but there was legitimate Feb call buying yesterday in Tesla. And again, you know, this is a name that's been out of favor, decent spot. So something you guys may have been interested in. Again, I don't know. Anybody else remember any of the other names flow-wise? You know, some of the put buying we've been seeing, that's what the type of call buying we want to see. Like this Mobley. You know, people put buyers keep coming after this thing. Pretty aggressive. IEP was another one. Yeah, these are long in the tooth too now. I mean, these things have been, look, they're taking a bath. They're taking a bath. You know, so there's been just, honestly, probably, there's not that much more aggressive call buying than there is put buying. I think both sides, it's just extremely, extremely selective. They're not making a play on a group. They're not making a play on a pocket of the market or a certain headline that's they're looking for. Nothing like that. They're just individually finding names. You know, one has nothing to do with the other is what I'm getting at. You know, we saw some, you guys remember, but this is like old news now. The space stocks, we were seeing some action in. I played some of the smaller ones there. You guys know this stock that's been on fire, ASTS. I think they did a secondary or announced a secondary. But this is old news. This is old news. You know, crypto, Bitcoin. Look at Bitcoin. Like you talk about no man's land. I mean, we talk about like risk appetite. Here it is. All right. Like if I need to show you a stock to explain or price action to explain what I'm trying to tell you guys, it's this. All right. It's not crashing. It's not ripping. It's just doing nothing. Absolutely nothing. We're seeing a lot of that. And, you know, the problem is when you see a lot of that, you got to be careful if stocks are up a decent amount. Because if there's deleveraging going on out there, and that's what could be going on right now. You understand? They're unwinding some of these overcrowded, over-leveraged positions. But it's being done gradually. Because if obviously, if it's done all at once, it would be a shitstorm out there. We kind of got a glimpse of it with the yen carry bullshit and the VIX explosion for a couple of days. Okay, that's what it looked like when you get an unwind all at once, all together. But it's a very gradual unwind that we're seeing. Very gradual. Yeah. Go figure, right? They're doing everything right, this Shark Ninja, as far as the company is concerned. Everything right. Really is amazing. Really is amazing. It's unbelievable. But, yeah, that's the beauty of these type of names. You know, even though the stock price is up a lot, you know, it's not over-owned, you know? This one too, right? You guys remember this? Kava. Look at this bad boy. Great blenders, so I'm told, Stephen. So I'm told. I thought they did blow dryers initially. I had no idea. But whatever they're doing right. This Kava has been, we need to see more of this stuff, right? No matter what type of player you are, we need to see more of these names. Okay, the market cap has nothing to do with it. Small cap, mid cap, large cap, that has nothing to do with it. We just need for the money out there to find new shit. All right, that's when the market's at its best. That's when you're going to find the most success as a stock picker, as on the long side, as a player in general. That's when the market is healthy. And even the bulls out there, they tell me the same shit. And you guys know, I get thrown in that perma bull camp, because I'm a long only player. But like even the bulls out there, they tell me, well, what are you going to do? There's nowhere really you're going to put your money. You're going to keep it in cash. There's a lot of cash on the sidelines. Or are you going to buy NVIDIA that's growing earnings at so-and-so? Why? Yeah, but there's only so much NVIDIA you can buy. There's only there's got to be other shit. You can't, every bullish thesis has the 3 mega cap names in it. Every bull I run into gives me the same spiel. Yeah, quality. You got to buy quality here. Stick with quality. Quality. You can never lose money as long as you buy quality. I've seen people get lit on fire buying quote unquote quality. So that's no strategy. Again, that's a place to hide. You understand? When you hear that, especially from the bulls, they're hiding. Okay? They can't find anywhere else to take risk, so they're hiding in places that they can hide. But guess what? The market lets you hide in these places until it smokes your ass out of it when you're not even paying attention. Right? And yeah, you should be buying quality. But when everybody's buying quality and has been buying quality for the past year and a half straight, right? So that's the point there. Yeah, and that's what I'm saying. So there are legitimate reasons, right? It's not the buyer strike that we're seeing. There are legitimate reasons for it. I get it. Like you said, right? You got uncertainty of the election. There's a coin toss right now, right? Forget about even the election. Even for the next few months here, you don't even know. That's why you see this market dancing around every little piece of economic data. The ISM coming in a little softer than expected all of a sudden means that much as the end of the effing world. A quarter point cut matters? What the hell does that matter? And now the market is worried about further weakness because even though you're going to get a half a bip cut, you feel like the Fed's behind. You know what I mean? They're just they don't know what to do with themselves. They don't know what to do with themselves. To Sahil's point, there's just nothing out there, And then that's where I'm at. And I've been telling you guys, there's nothing that excites me right now out there. There's nothing, and maybe excitement's, I'm getting a little too crazy with that word, but there's nothing I'm interested in. There's some stuff I like, look good if you tuck them away. I see the opportunity there, but there's nothing, there's no sizzle out there. There's no sizzle. Right? Every time, and you guys probably fall in the same camp. Every time you try to look for something interesting, my eyeballs always go to the semiconductors. Right? Always go, oh, well, this chip stock's down, from the highs. It's just the semis. And that's exactly what's going on. Nobody's interested in anything else. And that's why, if this AI theme has legs, okay, from here, you're going to see it broaden out and broaden out in a big way. In a big way. There are going to be other things that benefit from it if it's that much of a game changer, equity wise. It's not just a couple of semis mooning. Yeah, it's not just that. Like, look at this shitstorm today. All right? Like, I keep telling that AI, but if you were like a real AI bubble, like a la 1999, this just based off the ticker would be $500 and splitting 2-for-1 right now. Just because the ticker is AI. This thing's abysmal. It can't get out of its own way. Look at this thing. So, okay, this may be a piece of garbage. I'm not saying that, but I'm saying you will start seeing more of these type of companies start popping up, right? Like this IPO we were talking about, this TEM, more of this type stuff. The next Shark Ninja, the next Kava, the next, those type of names. Yeah, Stacy, that's the problem. You understand, when people get hung up on the same names, right? And even if they're quality, it's almost like they lose track of how much they're up and how expensive they become. You know? And then you start to hear them talk about, oh, well, it's trading at 30 times 2027 earnings. Like, are you kidding me? You're forecasting 2027 earnings? Really? In this fucking world? Come on now. You know? But you get quality names that are trading at like 60 times earnings. One little mishap, one little miss quarter-wise earnings, anything, and that stock is done. That momentum will get sucked out of it so quick, you don't know what hit you. And that's a perfect example, Stace. There are a lot of, you got a good amount of those type of names that they've done well, but they got too pricey. Something goes wrong, which is normal. You miss a quarter, it's totally normal. And you're going to pay the price. Yeah, look, go figure, right? And again, this is the type of bull market we're in. I call it the IBM GE bull market. Do you realize that, Sahil? Like, that's my grandfather would tell me about those stocks when I got into the market. How's GE and IBM doing? I'd be like, Pop, those stocks, they're dinosaurs. We don't look at those stocks anymore. And meanwhile, they're the best two companies on the board right now. IBM and GE. If you had your money in those two, that you'd be sitting on your own island. All right? That's what it is. That's the market we're in. Reddit, honestly, Khalib, I remember calls and puts. I don't know if they were weeklies, but kind of two-sided action. Nothing that I remember, so nothing noteworthy enough to tell you the truth. And I pay attention to Reddit when they hit it the right way, when there's decent action. They like to, but to your point, they like to play recently off pullbacks. They like to play a bounce in short-term strikes. They've been doing that a lot. But even like, I don't know Reddit. I don't know anything about the business. But this is exactly what I'm talking about. Like this type of name. Doesn't have to be Reddit. I'm just saying this type of name. You have a stock that's kind of just been range bound here, sitting around, okay? We come in tomorrow and all of a sudden we start see them scoop up aggressively early morning, November, December, January's, right? That's the type of shit we want to see. That's the type of shit we want to see. These type of names that, listen, there was a period in the market where there was, because the IPO market was so dry, there weren't many, there weren't really many out there. You have more out there. You have candidates out there now. You have names out there that if we saw aggressive buying come into would fit the bill. It's just the interest is not there. The appetite. I keep using that word. The appetite's not there. Probably wrong language, but just wondering if there was call buying in the name. Oh, no. Nothing that I've seen recently. Nothing noteworthy, Khalid. Little bit of flow. I remember calls and puts actually, but nothing noteworthy. Nothing noteworthy. What about this? Anybody know this name out there? I mean, I can't blame you if you don't. This IFF. Anybody know anything about this? I'm just asking because, again, if it wasn't for Stacy, I had no idea what Shark Ninja did. So I like to ask you guys from time to time names. I see some flow. Anybody familiar with this name at all? Any catalyst that may be behind it? I mean, this is not a growthy type name, though. Dinosaur. TAM is so hard to, but possible takeover. Yeah, I'm a little aggravated with the TEM stace because I wanted to see flow. If you remember, we were talking about it on the webinar. Like here, I think it was set up perfectly right there. See? Here and here. It kind of reminded me of ARM. So I wanted to see some sweeper buying in it just to confirm that this thing was ready to go, and we still haven't seen it. We actually saw some put buying a couple days ago, to be honest. But it had that run, so that makes sense too. But yeah, this is exactly the name. This is this type of name. I want to see these type of names catch action. Food and what is it? Food and this cosmetic spa. Yeah, I mean, I don't know what the hell this is. Like it's a profitable name. Maybe they just see value there. Space is growing like crazy. Interesting. Well, there you go. So, for those of you who may have an interest, I think they were January calls, if I remember correctly. But for this particular name, it doesn't catch action. Had pretty decent action. It's the top OI position. So if you look at open interest, it's the top OI position in the name right now. Perfumes. Yep. Flavors and fragrances. What else? Anybody else see some flow that may have looked interesting in a name? Maybe, sometimes I think names do one thing and they do another. Anybody happen to see any flow or anything that caught their eye? Anything at all? Here's another name. I know you guys like to trade, right? PLTR. That's been active. Still looks good. We talked about it. TLT had call buyers, but today we saw some protection. I think yesterday a little bit too, ahead of the NFP tomorrow. But net, the flow in TLT has been bullish up until today. But, they could just be protecting the NFP tomorrow. But we saw some nice flow down here before this move. A couple people in the Steamroom played it. But overall bull flow, again, just more recent, some protection ahead of the jobs tomorrow. What the hell? This ginger ale is exploding all over me. CPNG had a little bit buying. This is a tricky name because again, it's not China, right? So that's good because China's been a shitstorm. It is Asia. It's Korean, but sometimes gets lumped into that China trade. What I'm not crazy about in the name Stace, I think I might have told you this before, is this. You know, I just think the upside is going to be a tough trip. What I mean by that is you get some upside, then you're going to get this, right? Then some. It's almost like if you like it, you got to hold your nose, close your eyes, and just put it away a bit. That type of stock. But you got Stanley Druckenmiller in it. That's a good thing. He's been in it for a while too, I think. And supposedly it's a decent company. But it's just that just Asia in general has been a tough market, man. To state the obvious. Like here's a name too. Perfect. You just reminded me one. PDD. All right. They're buying decent size. This name always catches size. They're buying 2026 leaps off this pullback here. Now, yeah, I mean, PDD is a real growth stock, if you could believe the numbers. Hot growth name. The Temu missed the quarter, so they had a bad quarter. But the risk is it's a Chinese stock. And honestly, I don't care what anybody tells me. There's added risk with anything. Any of these Chinese companies. So you just got to be careful, size appropriately, if you're going to buy it. Any of these names. GEV, good call. We've seen some action in that name. That's the GE spinoff. Has been a real good name. Real nice name. No doubt. We saw mostly, we've been seeing some rolling activity, some of the repeat action in it, but there was some buying earlier in the year. Some good looking buying in it. ON, we've seen flow in it. It's just quite of more recent, but we've seen flow in this name, the sneaker name. Yep. I kind of put this in the category, Bandy, of some of the older flow we saw in some of these growthier type names. ON has had nice flow in it. Definitely. But to Stacy's point, at this point, you got to be a little more careful here, because it's kind of, this egg is already hatched in a sense. It's already been moving. Like Stacy was pointing out this guy here, CELH, where they were buying in this consolidation here. You had a hell of a move. I mean, this thing doubled 50 to 100 in 2 months? And then, bloop, right? So, that's, and you see how gun shy I am, guys? That's just being in the game that long. You guys don't understand unless you're in the game that long. That's why I can't get myself to chase up here ever. Because even though there may be some upside left, if things go wrong, this can happen. And this is a little drastic, but like the point Stacy was making earlier, you get from opportunity to expensive, and now something goes wrong, it gets its rear end kicked. See here, I'm told they are, but how do you never know for sure with these China names. You never know. I was told Luckin Coffee was legit. It was, but the CEO was cooking the books. It came public again, that Luckin Coffee. It was a legit company. It's just the CEO was fugazi. So that's the problem. You never know with these Chinese stocks. And the other thing is if the government decides to get their hands involved. was a Chinese blue chip name. EDU. Online education. Look what they did to this thing. Okay? This thing was the best stock on the board. They were printing money, profits. And then look what happened here. I don't believe it. I don't blame you. They do. You know what the PDD is, right? So that's that Temu that people lost their minds about. That online retail thing, Temu. I saw the Zeta. I saw that. We saw some action in this too. A couple of people in the room actually liked this name a while ago. I don't know if they're still in it. What a move. What a move. Again, this is a name, like you just said, an egg that's hatched. This is an egg that has already hatched. But what a move. Yeah, it can't get out of its own way. This was another big one, right, Stace? Baidu? Look at this stock. Just can't. Look at what a mess. What a mess. Unbelievable. And like the Baba too, right? Look at this. But, and listen, some of it may be priced in because of how much damage there's been, but China is a mess right now. It has been a mess for a while. For a long time, actually. China's got headaches. China's got headaches. And then if Trump gets elected and holds them ransom with tariffs and all that, God only knows. To Sahil's point, there's so much uncertainty. But that's the story, guys. That's the story. Listen, there will be a time, if you hang around long enough, we're going to hop on these webinars, especially those of you not in the Steam Room on the Thursday webinar, where we're not talking macro, we're not talking about sentiment and all this stuff nonstop, CTAs, that we're just talking about names and new names catching flow, and that time will come. We keep waiting for it, but it will come. And again, even if it's not a lot of new names, just some new setups to talk about. New setups, new sectors, new whatever, but something to talk about. And the sign for you guys is when I start off the webinar leading with that, because that's what I get excited about. So that's what I want to talk to you guys about. I don't want to talk to you about CTAs that are in the same position they're in for the past 2 weeks. You understand? I like these webinars when I get on here sharing, right, new flow, new ideas with you guys, and see what you think of the names and what you know about them. So that time will come. We had the summer. We had earnings season this summer. We still got a big election ahead of us and the Fed, but maybe things will loosen up a little bit. Maybe things will loosen up. Anybody have any last questions or anything to add before we run? Give me, on the way out here, I want you guys to give me one football winner. Those of you who roll the dice. Give me the one weekend give me your lock of the weekend. Adderall filled. Astro, that's classic. Phew. He says few. Adderall filled. What a character. What a character. Who's got some football winners? Anybody got any football winners for me? This delay, this YouTube delay drives me nuts. So Heel's got the Texans. Are they giving points? Or they're on the road, right? I like the Texans. I like that QB. Max is going Cleveland over Dallas. Nice. Texans -3. Yeah, I saw that line. I like the Texans too, I think. We'll see if we make road favorite. Stacy's going tonight, Ravens, right? All right. Stacy gave us the winners here. She gave us the winner tonight. Bet against Mahomes. I'm going to send it in, Stace. If they lose, don't show up next Thursday. I'm going to send you the bill. All right, boys and girls. Enjoy the rest of the night. Enjoy the start of football. Those of you in the steam room, I'll see you mañana for the NFP in the morning. The rest of you, I'll see you all next Thursday, next week. Have a great night, everybody.